have some very exciting news for you. The Federal Reserve will be turning the money printers back on December 12th. So I just want to say that I was wrong. Back in 2024, I predicted that the Federal Reserve would turn the money printers back on in 2026. And as we got closer to next year, I thought that they're going to start that process in early 2026. But nope, December 12th. Okay, so they're not calling it quantitative easing. They're calling it reserve management. So I guess it's technically not QE. It's a rebrand. It sounds better. It sounds nicer. But I'll tell you, it's the same crap. It's balance sheet expansion. It's money printing. It's all different ways of saying the same thing. And I just want you to know that it's not going to be a small amount. They're going to start with $40 billion this month, which is wild. So they're saying, oh, we're just going to start with $40 billion a month, and then in a few months, the money printing should be a little bit less each and every month. You know, to that I call BS, because as I explained before, it's like an addict. They're going to require a bigger and bigger dosage. So they're not fooling me. Like, I don't know who they're trying to fool. And I'll tell you this, you know what's hilarious? Jay Powell, chair of the Federal Reserve, just said that the Federal Reserve is committed to getting inflation down to 2%, even though inflation has been rising. Okay, so, this is funny to me because inflation is going up. They just cut interest rates today, and they're going to print $40 billion a month starting December 12th. So, sure, they're very committed to 2% inflation. Like, what a joke. Like, give me a break. So, this is why I've been stocking up on gold and silver exposure. The Federal Reserve just ended their meeting today, and they had their press conference as well, and I want to show you what happened. So this was their official statement released at 2:04 p.m. Eastern Time today. Blah, blah, blah. It says that they've decided to cut interest rates by 0.25% today, and they decided to turn the money printers back on. Okay, so the Fed funds interest rate has now fallen from 4.0%, 0% to 3.75%. And it says that future rate cuts will be determined by the data, as usual. And here it says the Federal Reserve will initiate purchases of shorter-term Treasury securities as needed to maintain an ample supply of reserves on an ongoing basis. So the money printers are back on. There's no given end date of when they're going to turn the money printers back off. Now, here's what they published today at the New York Fed. So I'm going to zoom in here so that you can see it. The Federal purchase, aka prints, $40 billion in Treasury bills starting on December 12th. And I just want to say that today's Federal Reserve meeting and press conference was a special one because they released their projections. And of course, they don't do this at every meeting. So I want to show you what they're projecting. So we click on that and it takes us here, their summary of economic projections, their SEP. And let's take a look. Here's the most important part of their projections. It's going to be this table. Back in September, they projected that the U.S. economy, so GDP, would grow by 1.8% next year in 2026. Now, they're projecting that the U.S. economy will grow by 2.3%. So that is a big upward revision. They're projecting that the unemployment rates will end next year at 4.4%, which is actually close to where we are today. And this didn't move much from their last projection that they made back in September. Basically, they're saying that these interest rate cuts and the money printing is going to prevent further deterioration in the labor market. So they expect that the rate of inflation in 2026 to be lower than expected compared to the forecast that they made back in September. Okay, so how's inflation supposed to go down if the economy will be much stronger than expected with interest rate cuts and money printing? Like, I don't know, but that's what they're projecting. The Federal Reserve, in my opinion, they really didn't do a good job of explaining how this is going to materialize. Now, I want you to check this out. Look at this. The Federal Reserve expects to cut interest rates only one time by 0.25%, 25% in 2026. So they're saying one interest rate cut all of next year. Now, my reaction to that is, yeah, right, because you have to remember that Jay Powell, he's going to be out of there in 5 months. And when President Trump puts his nominee as the new Fed chair in May of 2026, I'm telling you, my expectation is that they're not going to do just one interest rate cut for all of next year. Give me a break. Now, I want to show you the highlights of the Federal Reserve press conference that they had today. Okay, let's start with this one. Let's go back to explaining why the Federal Reserve believes that the U.S. economy or GDP is going to be much stronger than originally anticipated. And Paul says, you're going to see it for yourself. He just chalks it up to Americans are just going to be more productive next year. Is it going to be because of AI? And Paul says, maybe a little bit because of that, but they just leave it there. Please take a look for yourself. Now I want to show you this one. This is a very good question. The question is, why are you printing so much money? Why are we starting with $40 billion a month? And Powell blames it on taxes April 15th. So Powell says that he wants to make sure that there's enough liquidity in the system for when people go to pay their taxes on April 15th. That's his excuse. Please take a look. Now, I want to show you this video clip, and the question is that the number one concern for Americans is inflation. It's the cost of living, high prices, just the unaffordability of daily life. If that's the case, then why are you not prioritizing bringing down inflation? And Powell responds by saying that, okay, if they cut interest rates, it's going to help the labor markets. And if it helps the labor markets, then incomes are going to rise faster than inflation. So if there's, good wage growth, then people are going to start feeling better about the situation. Please take a look. Okay, so that's your Federal Reserve update. They cut interest rates today. They're going to start the money printing December 12th. They released their projections, which are pretty much meaningless because the new Fed chair is going to come in May, and it's going to be someone with a much dovish monetary policy stance. And guess that sums it up. Thanks so much. Please subscribe. Thank you for the support. I wish you a very nice day. Stimulus checks and next Tuesday's major announcement. We've been hearing a lot about stimulus checks recently, most notably the $2,000 announced by the president a little over a month ago, as well as all the people within the administration who have also been coming out doubling down on the distribution of that $2,000. However, if you've been watching the videos for a while now, you've been hearing me talk about many different catalysts that are out there that could distribute additional stimulus checks to us above and beyond that $2,000 that the president talked about again a little over a month ago. Well, I want to point out the major announcement coming out next Tuesday that we certainly need to pay attention to very, very closely because this is one of the key factors that helps determine the distribution and or approval of any type of stimulus going forward. And this is a key piece of data that we need to watch very, very closely. And it's also delayed quite a bit as well. And they've also extracted some of the other data from the findings. And I want to point that out for you here in this video. Now, again, if you've been hearing me talk about this over the years, what is one key data point that we need to watch very closely going forward that gives us a big, broad look of the overall economy? Now, you've heard me say this many times before as well, which is what predicates the approval and distribution of stimulus every single time. It's the economy. Every single time, the economy. What is the broad barometer that we like to look at to see the overall health of the economy? It's the jobs reports. There are jobs reports that come out every single month. Now, obviously, because of the government shutdown in October and the first half of November, well, we're not going to be getting October data. That's gone forever. We will never get that. However, here this coming Tuesday, so next Tuesday, we will be getting November's job data. This is going to be very, very important because what we've been seeing over the last several months here, basically since, say, June or so, we've been seeing weakening economic data, as in a lot of the economic data coming out, but most notably the jobs data that's been coming out has been getting weaker and weaker. Maybe the headline number comes out and looks pretty decent, but when they come back months later and they revise it, we've been getting negative numbers. And again, that's not looking all that great for the overall broad economy when we're seeing, well, basically bad jobs numbers, as in people not being hired, people being laid off, and the unemployment rate going up, labor participation rate staying the same, or even going up. Again, not looking good for the overall economy because you've heard me say this many, many times. When we're in a very strong, robust economy, well, generally the unemployment rate goes down, jobs are being created, and you see, well, the unemployment rate going down and many, many jobs being created each and every month. We're not seeing that right now. We're seeing very low numbers of jobs being created, as well as we're seeing the unemployment rate moving higher. So, and again, those revisions are also very important. Okay, so long story short, we were supposed to get the November jobs data back what was it, a week and a half ago or so, give or take a little, the first Friday of the month, whatever that date was. What was that? Is that the 5th or the 7th or something like that? Anyway, the first Friday of the month, I think it was the 5th actually. Is that right? Yeah, it was the 5th. Okay, so we were supposed to get it that day. However, because of the government shutdown, it was delayed and it's coming out this next Tuesday. Okay, well, this is going to be very important to watch because, again, do you think that hiring should be strong or weak in the month of November? It should be pretty strong, right? Temporary seasonal help should be coming in for the holiday shopping, right? Right here, right now, everybody's out spending all kinds of money, right? I don't know. Is anybody spending money right now? Not sure about you, not really buying anything. I'm not sure if you're out there blowing all kinds of money right now, but I think the vast majority of people are not in that position. We will see. This is going to be the tell for the overall economy right here, right now, the holiday shopping season, as we're supposed to get this license to spend, right? Go out and buy a bunch of junk. Yeah. Okay. Yeah. We'll get right on that, right? Anyway, point being is that if we see a very weak number here coming in for jobs, hiring, unemployment, coming in for the month of November, that's not going to look good at all. Okay? Because first off, most of these businesses out there are not going to hire in December. It's too late, right? The holiday shopping season has already started and is basically, multiple days in. We're likely going to see a lot of that hiring in November, and that's supposed to show up on this report here. So this next report we get is going to be very, very important. Not only the November data, but also the revisions for the prior couple months. Are those down? Are they negative? More negative numbers? Or where will those numbers come in? Very, very, very important because, again, when it comes down to it, at the end of the day, what's most important for a strong economy is strong labor force. Very strong labor force. We're not seeing a strong labor force right now. We're seeing the unemployment rate ticking up. This is the highest unemployment rate that we've seen, by the way, since 2021. Things were not that great in 2021, right? We were still coming out of the shutdowns. Everybody stay at home and live in your pajamas all day and, all that kind of stuff. But anyway, this is the worst numbers that we've seen in quite a few years, right? So anyway, when it comes down to it, remember, we could send out $2,000 tariff-induced stimulus checks as the president wants to do sometime next year or so, as he says, or we could have an economic-induced recession or economic contraction that needs stimulus, right? That's what predicates the distribution of stimulus. I've seen some comments down below over the years where people say things like, well, we've asked and they're not listening. They don't care what we ask, okay? I'll be 100% fair with you. They don't care how much we ask, how much we beg, how much we are bugging them to get a stimulus. They couldn't give a rip about that. It's not about us needing it. It's about the economy. When the economy needs stimulus, that is when lawmakers come together and approve these multi-trillion-dollar stimulus packages. They give it some cute little name like the CARES Act, the HEALS Act, the HEROES Act, the American Rescue Plan. These are all a piece of legislation, by the way, that either they introduced or passed a few years ago. 2 of those that I mentioned they passed, 2 of which they did not. But my point is they give it some interesting name and then they pass it through. Most of the time, they do include stimulus checks because they know this is the best and fastest way to get a lot of money into the economy very, very quickly, because they know that if they give us money, what do? We blow it super fast. We take the money and we blow it on stuff. That's what most people do. By the way, I know that those of you here in this community will use it to buy necessities and be very responsible with it, because I know you in this community. I mean, I don't want to act like, oh, I know you like my best friend, but I mean, we kind of know each other. People here in this community spend it on necessities. But the vast majority of the population just blows it on stuff. And that's exactly what they want, right? They want us to take that money and say, oh, here, go spend it on a bunch of junk. Like, they want that because then it stimulates the overall economy. That's what they want. Okay, but anyway, long story short here is that when we get this labor jobs report here coming out on this coming Tuesday, this is going to be a very, very, very good tell on the overall economy. Now, the last report that we got in the middle of November was September's data. Who cares? That was so delayed at that point. Didn't really matter. We didn't get anything for October. Now, this is going to be the most up-to-date report that we're going to be getting here, which is going to be pretty important because it's going to be November. It's still delayed. What is that? I don't know. A week and a half or so. Yeah, 10 Yeah, about a week and a half or so ago, or sorry, a week and a half from when it was supposed to be released the first Friday of the month. But nonetheless, late is better than never. And again, we better see a strong report. Otherwise, H-kiss this economy, goodbye. And at that point, it's only a matter of time until we crash and burn. And that's when they print trillions and they push a lot of it out in the form of stimulus. Anyway, this can be a very, very important one, as again, I've said this many, many times. We could see a tariff-induced rebate dividend stimulus as the president wants to do $2,000. That's totally different from an economic-induced recessionary, economic contraction-induced stimulus check to revitalize the economy. Two very, very different things. Anyway, this report that we get on Tuesday is going to be very, very important to decide the fate of any further stimulus going forward. And I'll tell you this much, the reports that we've been getting out over the last few months have not been all that great. Not very good, showing a weakening economy, and that's not good because that leads to economic contraction and a lot of times major recession. Anyway, I'll keep you posted. Again, if you're new here, please consider subscribing. Big subscribe button right down below. Please share the video. Big share button down below. Happy holidays. Thank you so much for joining me again. Stay tuned. It's such a weird time right now. There's a lot of big things happening. Otherwise, take care. Stay tuned. Please subscribe, share the video, both of which are right down below the video. Subscribe and share. Otherwise, check out the other 6,000 plus videos here on the channel in the video library. Until next time, I'll catch you later in the next one, and I'll see you again soon. Thanks so much for watching, and I'll see you. Breaking news is here for every Social Security recipient in America. The Social Security Administration has just announced a massive update that will take effect in 2026, and it could mean the largest payments in decades for millions of Americans. 5 states in particular are set to receive historic payments exceeding $3,000. These are not small adjustments. They are significant life-changing amounts that could dramatically impact your financial situation heading into the new year. But there's a catch. Not everyone will automatically receive this payment. There's one crucial step you must complete to ensure your money arrives on time. Millions will hear about this too late after payments are delayed or even held. You're hearing it early, which gives you a major advantage. Today, I will break down exactly which states qualify, who is eligible, how much you could get, and the critical actions you must take before January 1st, 2026. This is information that could save you thousands of dollars. What's changing in 2026? Every year, Social Security payments are adjusted based on the cost of living adjustment, COLA, which takes inflation into account. However, the 2026 adjustments are not ordinary. The SSA has approved a historic increase that could push payments beyond